look, we are pleased with the result. We've achieved what we said we were going to achieve, which is always a great thing to do when you're in the marketplace. And also we overachieved in a couple of key areas, particularly on the customer account numbers and the revenue side of the business. So this really is reflects the 5 years of growth that we've had as a business together. I mean, we're recognised as one of the fastest growing companies in Australia, and I think this result really shows that we can continue to achieve that. And we are also starting to think about where this business may go in the next few years as well, looking ahead. So we are very happy with the result that we achieved. I think the financial results and the customer numbers were the key highlights for the year. We grew our customer numbers by 88% for the year, going from 145,000 accounts to 272,000 accounts. This is really an accelerated growth profile. We've spoken about it during the year about now we're to New South Wales and Queensland market, those customer numbers have increased. And look, the revenue going also to over 230 million outside of guidance range was also a great result as well. Sort of shows the continuing accelerated success of the business. But also the bottom line financial results are starting to be shown as well, where we saw an EBITDA of just over 21 million and an NPAT of 3.7 million. So this has allowed us to pay our first dividend of half a cent, and I think it's important for the company and for the stock to actually pay a dividend and show that we are continuing with our growth, and this will be a strong stock going forward as the customer numbers build and the accelerated acquisition program continues to deliver results. I think the pace that we're growing at over 10,000 net accounts per month at the moment, and that's certainly a pace that we can continue at least in the short to medium term. The business will continue in the 3 states that we're operating in, and we're potentially looking at other markets to move into as well, and that'll allow that rate to continue. Over time, in the next 2 to 3 years, the rate will slow off slightly, but at least in the interim, the high growth that you've seen will continue. We're certainly out in the market and forecast over 400,000 net accounts by the end of this financial year, and we're confident that that's a certainly sustainable level at the current growth rates we're experiencing. Reaffirmed our guidance for this coming financial year, and in the first 3 months of the year we've continued at our customer growth rate of over 10,000 net accounts per month, so hitting our target of over 400,000 net accounts by the end of this financial year is well in train as we sit here today. But I think as well as the guidance for this year, we've sort of started to set the expectation of what the business might look like in a few years' time if we continue at the current growth rates, which we are very confident about. This business tends to look at a retail business that's circa 700,000 residential accounts across the eastern seaboard, and that type of business, if you look at the parameters that we have today, deliver a business with over $1 billion of revenue. I think it's quite an exciting future as we continue the growth. This last year was a strong platform for growth for us, and now we can start to set our sights on what that goal might look like in the future.